Good morning, everybody. This is the live market open for April 19th. It's a Wednesday once again. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Sorry a bit about my voice. I have a small cold, nothing serious. Anyway, we'll cover recent developments in markets, talk about various charts and levels, our usual technical segment for crosses and majors, discuss the upcoming events of this week, preview the big event of the weekend, the French elections. It's really an open race. We do not know what will happen. The currency of the week is pound dollar. And then, of course, we'll discuss the week ahead and wrap up the show. As always, your questions are more than welcome. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Good morning, Ed. Good morning, everybody here. So the big event yesterday, of course, post-Easter. We didn't have to look for many calendar events, but we had a huge announcement from the United Kingdom. Prime Minister Theresa May surprised markets announcing UK elections, a general election on June 8th. Today, Parliament will discuss it and make it formal. The pound, which initially dropped just a bit, jumped eventually a lot. Massive short squeeze. We'll cover that more in detail in the segment about, our currency of the week. French elections, as aforementioned, they're very closely watched. It's an open race now with 4 candidates, no less than 4, that can make it to the second round. It used to be a sort of 3-way race, but now the polls are showing a very close race between the top 4, very different 4, between extreme right, extreme left, center right, and centrist, center left. So it's quite mad. The US dollar jumped while attempted a recovery, as Treasury Secretary Steve Mnuchin told the Financial Times that the strong dollar is justified as the economy looks strong and investors have confidence. That contradicted what Donald Trump said, that he said everybody's manipulating the currency and he wants a weaker dollar. Anyway, as we've seen yesterday, the US dollar is not doing that well. We're already almost 100 days into the Trump administration, and there's a lot of disillusion. We have a few stories in the background. The North Korea tensions, which are, U.S. Vice President Mike Pence is over there in the Far East, in Japan, beforehand in South Korea, and there's sort of a story in the background currently not influencing markets. Good morning, everybody. Good morning, Jax. Video not working? Well, as far as I know, it is working. Pound and euro, good stuff over there. Anyway, Georgia and the United States, not the country. There were special elections which showed a very, very close race in a district that usually favors Republicans. So this is also sort of a warning sign for Trump. Thank you, Mauricio, for the helping out here for Jax. And, markets are fully back after Easter. Trading volume is back to normal, and volatility is also back to normal. So quite a lot of things on our plate. Let's run through a bit of data that we had before looking at the charts. So in the United States, on Good Friday, on Easter, we had weak figures. CPI disappointed. The month-over-month figures dropped, and the corn inflation is back down to 2.1%. It used to be 2.3%, so less motivation for the Fed to raise rates. Also, retail sales, which are critical in the United States, country of consumption, they dropped 0.2% with downward revisions. Not all the figures were terrible, but certainly not strong growth. We'll have growth figures next week. On the other hand, consumer confidence is up, beating expectations with 98. So we have a big conundrum or difference between the soft data, what forward-looking indicators are telling us about consumer confidence, investor confidence, and the hard data, what actually happened in the past, in the recent past, which isn't that rosy. Well, some figures are mixed. Jobless claims are okay. Building permits and housing starts, well, more or less. Not such no big surprises. Elsewhere, not in the United States, Chinese GDP beat expectations, rising 6.9% year over year. Other figures from China, industrial output, retail sales, foreign direct investment, everything was above expectations. It gave a small boost to the Aussie. The Kiwi milk auction was also, the milk prices rose in the global dairy trade, and central banks in Canada and in Australia did not rock the boat. The Bank of Canada made a rate decision, and the RBA in Australia released its meeting minutes. Okay, now let's move to the charts. Our technical segment for major pairs for the third week of April. So here we are, euro dollar. Why is my screen in purple? That's because we're in the middle of a channel. So let's zoom out for just a second and see this uptrend channel here of euro dollar from the lows of 103.40 early in the year. We had a few higher lows, okay? We also had a few higher highs, but that's less distinct, less clear. Anyway, we're moving up here. Let's zoom in once again and talk about closer levels in euro dollar. So currently 107.25, flirting there with the line that used to be support 107.20. Anyway, below we have 106.60 and 106.30. We bottomed out over there at 105.65 after a struggle, and we're back on the up and up. Further resistance at 107.75 and 108.30, followed by 108.70 and 109.05, which was the high of this year, seen just in late March, not that long ago. Pound dollar, here we have the huge story yesterday. 128.25. Just yesterday we were 300 pips lower. Okay, that's the election effect. We had a small dip here. You can see the small dip initially when we only learned about the press conference and rumors came out, but then the pound began rising, and towards the late hours of the US session, we even had a sort of a gap in the charts. Let's try to zoom out and show that sort of a violent short squeeze, if you wish. This move right here, you can see that, we had this gap higher. Well, you can't see the gap here. It was a matter of minutes, this big jump. Also this one doesn't show it, but it was quite a violent jump to the upside. Then we had the gap more or less filled. But anyway, we are back. We're still on very high levels. For me, the significant level is 127.90, because that was the post-Brexit low, the initial post-Brexit low. Good morning, Montreal. Good morning, everybody. Further below, we have support at 127, a high seen not that long ago, 126.20 and 125.70. To the upside, we have 129, which we reached shortly. I'll zoom out for a second to the daily chart so you can see that we're back. We had the post-Brexit range of 128 more or less to 135. We're back to this range, the lower end of this range, but back to levels last seen. When it was good weather also, when we had better weather back in September. Okay, so it's certainly a jump. We're certainly out of the long term of the 6-month range that we used to be. Above 129, we have 130 and 131.20. Let's continue to dollar yen. Dollar yen also reflects the weakness of the US dollar, so it's a continuous grind to the downside. We had an initial loss of 111.60, the triple bottom, then struggled with 110, lost that level. Currently, we're struggling with the previous low of 108.65, but yesterday we reached lows of 108.10. Further support 107.50 and 106. To the top side, 110 works as resistance. Okay. Okay, so I see you guys managed with the video. Good morning, Alexander. Good morning, everybody. Let's continue with dollar CAD. Dollar CAD more or less in range, as you can see in the past few days. 134.12 resistance, 134.60, 135 and 136 support, 133.80, albeit it's a bit weak, and then 132.65 is stepping stone on the way up, and 131.80. Okay, Aussie dollar, despite the good news from China, and not always rosy over there, sort of a bit of risk off mood currently. Holding above 75, 75.16 at the moment. Below 75, we have this very stubborn bottom of 74.75. You can see that the pair could not break lower. Below 74.75 we have 73.75. To the top side 75.40, and then 76.10, which used to be the bottom end of the range. We had very stable range trading between 76.10 and 77. Now we're at much lower ground here with the Aussie dollar. Okay, Kiwi dollar still hugging, I would say, the 70 level. It made an attempt to move above 70.40, which kept it in the past, but didn't make it. Further resistance 70.90 and 71.40. Support 69.50 and 68.80. Okay, and our last major is dollar Swiss, below parity at the moment, reflecting dollar weakness. Further support 98.50. Well, before that we have 99. To the top side we have, of course, the line of parity and 101, followed by 101.70. So a little bit leaning to the downside. Okay, this concludes our major pairs technical segment for lines of support and resistance. And now let's move to the crosses. So here we are looking at crosses for this week, third week of April. Lines of support and resistance. We'll start with a very frustrating pair, Euro Swiss, prone to intervention by the Swiss National Bank. 106.92 at the moment, resistance 107.50, followed by 107.80 and 108.25, support 106.60 and 106. Euro pound, quite a big movement over there with the surge of the pound yesterday. So it dropped quite sharply. Found support there, well, with this flash crash to 83, but 83.30 remains support, resistance at 84, further resistance at 84.80, which worked as support in late February, further resistance over there at 85.75. To the downside, we have levels last seen, well, in quite a long time. Euro pound was quite stable for a long time, but now we tested the downside, so we have support there at 82.67, 82.20, and 81.50. Let's continue. Euro yen. Let's zoom in just a bit. Currently at 116.80, resistance 117.40, 118.15 and 120, support 116.25, a bit weak, 114.50. And if we look to the downside, well, also here, we're back to levels, the strength of the yen, back to levels last seen about 4 or 5 months ago. So we have further support at 113.80 and 112.80. Pound yen, here we had a catch-up. I was complaining last week that this pair, the dragon, the gepi, usually a fast-moving pair, began slowing down, expressing some boredom. Well, no more boredom here. We had initially the strength of the yen, and now the big comeback of the British pound. Just under 140 at the moment. 140.50 is the level of resistance I see here. It was the high triple top in March, followed by 142, 142.80, and 144.80. Support 138.60, 136.40, and 135.50. All right, and as usual, we're adding oil prices to our technical segment for crosses. So quite nice range trading here. Stubborn bottom at 47. Since then we went up. Managed to top the 52 level, which used to be resistance last year. And now we're in the range between 52 and 54.50, maybe 53.60 there. The recent high is also significant. And another line to mention to the downside is 49.50. Okay, so this concludes our technical segment for crosses. Today, April 19th, middle of April, just after Easter, trading volume fortunately is back, and so is volatility. Okay, let's continue. Let's continue now to the upcoming events this week. A week that began slowly just after Easter, but then certainly moved forward. So today we have a bit after the show at 9 GMT. That's 11 here in the old continent and 10 in the UK. The final inflation figures for the Eurozone. The initial figures for March were very disappointing. showed a setback in inflation. Is disappointment for the ECB. Inflation, not including oil prices and also including core inflation, is not going anywhere fast. And that's a problem for the ECB that wanted to scale down, or some people there at least think that they can soon scale down the monetary policy. So things are moving a bit more slowly. At 2:30 GMT, we have oil inventories. So oil prices remain a bit vulnerable, a bit fragile. For those trading the Kiwi, we have at quarter to 11 GMT the inflation figures released only once per quarter in New Zealand, and so they make a big difference. They influence, of course, the RBNZ. Tomorrow we have in the United States the Philly Fed Manufacturing Index, an early indicator for April, and jobless claims at the same time. Well, the Bank of England's Mark Carney will talk. Let's see if he reacts to the elections, or, well, more importantly, on his agenda. It's of course, the pound that is strengthened. I think it's a big sigh of relief for him, because the rise in inflation in the UK has been a bit painful, and he does not want to raise rates. He does not want to do anything at all. And we have U.S. Treasury Secretary Steve Mnuchin talking later tomorrow. He already moved the dollar with his comments, well, talking directly about the dollar. So let's see if he presents some tax reform, which can be dollar positive, or not do anything, which will be dollar negative in this case. Okay, comment here from Ed. Scale down less for more again. Yeah, okay. And Friday we have a busy day, sort of an eclectic mix. We have the Eurozone flash PMIs between 7 and 8. The German manufacturing PMI remains the most important one. UK retail sales. So maybe a bit of reality. So if today Parliament will vote to dissolve itself and everything is focused on the elections, we'll have a bit of hard reality. Retail sales have been mostly negative in recent months, showing that consumers are reluctant to spend, to flash the cash, buying more essentials than non-essentials. For those trading the Canadian dollar, we have a CPI at 12:30 GMT on Friday. Then Neil Kashkari, the big dove in the Fed that voted against the rate hike in March, will be speaking at 1:30 GMT, and existing home sales conclude this busy week. Okay, so that's what we have on our agenda coming up. Questions? All right. So now for a segment about the French elections. Here is the preview. Here is a bit of French I picked up towards this presentation. Is très important. It's very important. It's the first round, and it's quite open. These are the 5 candidates from left to right, and in the first round, only 2 will make it to the second round. So let's begin with a bit of a background. It's a very unusual election round in France. In the previous elections, we had well, it was left against right, socialists against the Republicans, center left against center right. This time is different. We have the 2 leading candidates here at the bottom, Emmanuel Macron and Marine Le Pen, are well, have the highest chances of reaching the second round, and they're not from these 2 parties. The incumbent, François Hollande, here at the bottom right, saying goodbye. He had at some point a 4% approval rating. In general, a very unpopular president. He was disliked on the left and on the right. Decided not to run. Okay, that's unusual enough. Let's talk about the most important candidates. Here is Marine Le Pen. She's from the extreme right Front National party her father founded back in the 70s. Anti-immigration, anti-Muslim, a bit anti-Semitic as well, I would say. She wants a referendum about Frexit, about the French exit of the Eurozone. Needless to say, well, not needless, because I'm saying it anyway, there's no euro without France. France is a founding country, the core of the core. If France begins thinking about the exits, it could start the ball rolling, and it's very dangerous. In theory, anybody should beat her because she has a very limited base. Even if she's the most popular single candidate, when her father did make it to the second round in 2002, He was defeated. Only 18% voted for him, and 82 voted for Jacques Chirac, the center-right candidate. So this will not happen in such a gap this time, but in theory, anybody should beat Marine Le Pen. Emmanuel Macron, currently at second place. He's 39 years old. He founded a party called En Marche, used to be, and the Socialist Party in the center-left, used to be economy minister for Hollande. He's very market-friendly, very pro-European. In some polls, he's leading, but his support is not solid. It's not the strong base that traditional parties enjoy. He's popular at the moment, but voters can also change their mind and not vote for him. He was never elected as well, and he's young, so it's not like he has a solid record. François Fillon, leader of the center-right Les Républicains, he used to be prime minister. He's very establishment. He does have a lot of experience. He was supposed to easily win the elections, but we discovered 2 months ago he has a lot of experience also in paying his own family salaries for work they never did, his wife and his sons. He's officially under investigation. He weathered calls to step down, and he insisted on running. He's also considered pro-market, a bit less pro-European, but at least a victory for François Fillon would be market-friendly, Euro-friendly. Okay, his support is smaller than Macron's or Le Pen's, but it is more solid. He enjoys the brand of the party of Charles de Gaulle. And here is a candidate that emerged recently in the debates. He had excellent debate performances. He holds a rally in one city and projects his hologram to stages in other cities. He's the radical left. He's, well, not that young, ex-communist, anti-market, wants changes in Europe. He doesn't want to dissolve the European Union like Le Pen, but certainly not a market-friendly candidate. Okay, and he had a surge in recent weeks and made it to the sort of margin of error zone. He has a chance of making it to the second round. And last and well least, an establishment candidate, establishment party, Benoit Hamon from the Socialist Party. His party elected him and not more centrist Emmanuel Valls or other candidates. He lost support of moderates to Macron, including some of his party members that openly support Macron, and he lost the extreme leftists to Mélenchon. He had very poor debate performances, and he's basically out of the race with only 10% support. Comment here, common practice in many countries is to employ ghost family members. Yeah, I must say it's not that rare, but France is a sort of well-established country where the rule of law is important, and when such a scandal comes out, it's quite a problem for the candidate. Many voters dislike Fillon and decided not to vote for him because of this. Anyway, this concludes our list of 5 candidates, but we can discount Hamon at the moment. Recent polls, and it changes every day. I follow a few polls. I follow the poll by Opinionway, published every day at 10 GMT. Another one is of IFOP, published every day at 4 GMT. Now we're reaching the last days of the election, so anyway, the polls show a very, very close race. As you can see from the data I picked up just yesterday, it changes every day just a bit. Macron is now first, but just 1% lead within the margin of error. Fillon, which currently doesn't, Le Pen is second with 22. Fillon, which is out of the second round according to this poll, but is within the margin of error as well, with 21. And Mélenchon is also very, very close. So we have centrist, extreme right, center right, and extreme left, all within touching distance of the second round. And to make things even more complicated, 30% of voters are undecided, according to most polls. Okay, so some can change their mind. We don't know how the turnout will be. I assume the turnout will be high, but it doesn't mean that it favors one candidate over another. Scenarios. In theory, if we count 4 candidates, simple math gives us 6 scenarios, but we'll reduce it to 4 scenarios, and the euro will certainly react in the outcome. The close elections could lead into a long night. We should have some kind of results before markets open in Asia on Monday, but you never know, and it could be a long night with the crazy Asian session and a weekend gap. So let's begin. This is the mainstream scenario because these are the leading candidates. Le Pen vs Macron, very clear choice in the second round between open and closed. Highest probability, but again, very close. Macron is set to beat Le Pen in the second round according to polls by, well, 25, 28%. So that would be a positive outcome for the euro because most moderate voters will coalesce around Macron and beat Le Pen, and will have a pro-European government in France. Okay, so the euro is set to rise towards 110 according to my calculations, my scenario. Okay, that's the scenario with the highest probability, but very close behind we have this scenario: Le Pen versus Fillon, extreme right versus center right. Very not such a big difference from the previous scenario. Here the odds are a bit closer. Fillon is set to beat Le Pen also with quite a big margin, 58 to 42. But some moderates will just stay at home and not vote for Fillon in the second round. Even though Le Pen looks scary, Fillon is well, causes disgust to many voters because of his scandals. So I would say the euro could fall, maybe even towards the lows of the year. Again, probably will have Fillon as president, but the level of certainty is much lower. This is sort of the nightmare scenario: extreme right against extreme left, which markets began fearing in recent weeks because of the emergence of Mélenchon. Both are anti-market. I would say Mélenchon is a better choice. He's more pro-European. This has a low probability that voters will go towards both of the extremes. And in this scenario, markets will not know who is worse. Euro-dollar could dive towards parity and even below. So in this scenario, I expect it has lower probability, but the outcome could be more significant for markets. And another scenario which we cannot rule out is that Le Pen stays out. I mean, in all these scenarios, we put Le Pen as number one, or at least as shoe-in for the second round. But if the extreme right candidate, anti-euro candidate, stays out, I think it doesn't matter who the two out of the three are, because it will be either President Macron or President Fillon. And then I think we'll have a huge sigh of relief. Euro-dollar could leap to 112 or 115, a big jump, perhaps not dissimilar, not different from what we've seen this week with the pound. Okay, so that's my fourth scenario. Let's conclude a bit because we've talked quite a lot. It's a huge event. Okay, if Macron makes it to the second round, I think it's the best scenario for markets, the best one for Europe. Mélenchon vs Le Pen is the worst. Having the centrist candidates out is the worst. Trade with care in any case. Some brokers, by the way, are limiting leverage and doing other stuff. And in any case, the story of the French elections, which has accompanied us for quite a few months, is now reaching the first climax, but it's not the last. It ain't over until the second round of the elections on May 7th. Okay, I see here some comments, questions. Question here from Montreal. Will these moves from yesterday retrace before moving on higher? I think you're referring to the pound. So I think that after such a big move, we might see some kind of consolidation. We're already some 80 pips lower from the peak, from the swing high on this flash move to 129.05 there. And today we're seeing some kind of consolidation. It makes sense. I think the general direction, at least for the pound, if you're asking, is up, but of course, Forex is never a one-way street. From Ed, yeah, when we talked about the family member employment, it says, think the market is heavy short euro-dollar, still a short squeeze in play, a more dollar weakness, not euro strength last days. Yeah, I certainly agree. What we've seen in recent days is more of a weakness in the US dollar, disappointment from Trump, a delayed response also to the weak CPI and weak retail sales figures on Friday, which was a holiday in many countries. Now we're seeing the reaction. And yeah, more of the undoing of the Trump train, the Donald derailment, if you wish, or Donald dump, or anyway, we're almost 100 days into the presidency. It's clear that we're not seeing any big economic reforms. He had a big achievement with Syria, he had a big achievement with the Supreme Court, but in general, the big rally of the dollar that we've seen in late 2016 is now unwinding. Okay, the euro is dependent on the French elections now more than anything else. Hope this answers your comments. Okay, and now to our currency of the week, pound dollar. Here is Theresa May, not when she announced the elections yesterday, just a funny picture I found. Anyway, quite a move in pound dollar, and I think we'll have lots more volatility. So, UK elections are held on June 8th. It'll be confirmed today. Labour Party announced that they will support elections, even though they're expected to be diminished by these elections. Theresa May, leader of the Conservative Party, the Tories, she's set for a landslide victory. Polls put her at an advantage, a huge advantage. So here we are in terms of leader popularity. The Labour opposition party is in big trouble. Jeremy Corbyn, the leader, popular among hard leftists, but not among the general public, receives only 14% support. According to YouGov poll, and Theresa May, Prime Minister, receives 50%. Even those that oppose her policies, I think, respect her. And this is one of the BBC poll of the polls. It shows an 18% lead of the Conservatives against Labour, 43 to 25, with the UKIP and Liberal Democrats trailing behind. The system in the UK, the first past the post system, means that this will not be the composition of parliament. The bigger parties will have a bigger proportion of the seats, and the smaller parties will be mostly out, but let's see, it'll be interesting in any case. So why does the pound like it? Why did the pound rally? Some hope that this will give May a mandate for a soft exit. It'll surely give Theresa May a mandate. Remember, she was never elected. So Theresa May, well, long-standing politician, she's in parliament since since 1997. She became Home Minister under David Cameron, held 6 years in that position. Then when Cameron quit, she didn't really have a real contest. Her opponents left the field, and she was coronated, as they say. Okay, and she has this relatively small majority. She is leading the Brexit process that she was against, or at least quietly against. She was in the Remain camp. So this will give her a bigger mandate. It'll also give her a mandate, markets hope at least, for a softer Brexit. That means that not up to now she had to prove that she was tough on Europe, triggering Article 50, and well, following the lead of the Brexiteers. Now she can, if she wins her own election, then she has a mandate to do perhaps things a bit differently, not go for a hard Brexit like she did so far, but perhaps for a softer one. A second reason that I think supports the pound is that she'll get rid of, more important than external opposition is internal opposition. Her companions, the Brexiteers, here is Boris Johnson in the picture, a foolish foreign minister. Maybe she'll have the opportunity to say goodbye to him and to some of her other opponents. Okay, perhaps a weaker UKIP, the United Kingdom Independence Party, which basically won. Now they have no reason for their existence. They managed to push for Brexit and they won. So, but they will be weaker in the election outcome. Defeated Labour. Now this is not related to Brexit, because Labour never had, well, they were pro-Remain, but not that clear. But a more defeated Labour means a more market-friendly parliament, regardless of Brexit. And the timing is basically perfect, okay? Because negotiations were not expected to begin anyway until June. The elections are held closely after France. Second one in France, May 7th. Elections in the UK, June 8th. So it doesn't waste negotiation time. So it's not that this snap election delays anything related to Brexit. So the pound certainly liked it. What's next for the pound? Okay, we had this rush yesterday. We're only one day afterwards, but let's look forward. We had this comment here about retracing. Sure, technically speaking, flow speaking, we'll have a retracement, but what's next for the pound? Opinion polls will be closely watched, of course, because it's an election cycle, but only in case the Conservatives significantly weaken. Now, if the Conservatives weaken, but the support goes to the Liberal Democrats, which were clear Remain supporters, it's not that bad for markets. Okay, so I think it's a bit less about the opinion polls, more about the Brexit negotiations. We have next week an announcement from the European Union about their policies towards the negotiations, and then we'll have things about Britain. May's statements in the election campaign about Brexit towards the negotiations, I think, were more important than polls. What about the other factors moving the pound? The UK economy is weaker. We learned that from retail sales numbers, and next week we have GDP. But the weaker pound, I believe, will help against inflation. Will make things easier, less pressure on Carney to raise rates, more money in pockets of Brits to buy things that are not food and not energy. So I think this will be sort of a relief for the economy. Some countries want a weaker currency. Maybe also the UK wants a weaker currency, but not this week, not what we've seen in recent months that, well, undermined the economy because of expensive imports. And we're talking about pound dollar. Let's talk a bit about the US dollar. Steve Mnuchin, the Treasury Secretary here, pictured with Trump, contradicted Trump on the dollar. It's unclear what this administration really wants. The US economy looks a bit weak. The job market looks perfect, but Q1 was probably very slow in terms of growth. The Fed is currently set to raise rates in June, but more doubts accumulate because of the economy, because of no fiscal stimulus from Trump, okay? And the dollar remains under pressure as Trump concludes his first 100 days in office. So what's next for the pound? I say the trend is up. We're back to the previous range we've seen last summer. Not a one-way street. Undoubtedly, we'll see some retracements, could be violent as well. Look for economic data to cool things down, maybe next week's GDP, and then other figures coming out in May. And then hopes for a softer Brexit certainly support the pound, at least towards the elections. Okay, so that's our segment about pound dollar. Certainly a twist in the tail for the pound. Hopes for a soft Brexit. We talked about how Brexit is bad and weighing on the pound until a few weeks ago. Now things look much more optimistic. Is this optimism justified? I'm not sure, but that's the trend at the moment. Okay, and now a preview for next week's events, the week of April 24th to April 28th, the last week of April. Last Monday, we'll have a reaction to the French elections. We've talked about that in detail. Also, watch out for the German Info Business climate. I believe the French elections, and we'll see a few rounds of reactions to that. On Tuesday, we have double feature in the US, the CB Consumer Confidence, which leaped to sky-high levels last month, but we're seeing that it's not that well correlated with retail sales. And also, we have new home sales on Tuesday. On Wednesday, for those trading the Aussie dollar, we have CPI, retail sales in Canada, and oil inventories. And lots of action comes on Thursday next week. 2 rate decisions in Japan and in the Eurozone. It's not the most important ECB decision. The bigger one happened last time, and the next one will be more important. But it's still the Draghi show. It's still interesting to see. The ECB began with a lower volume of bond buying this month in April. So let's see how they react to that. Also, top-tier figure in the United States, durable goods orders feeds into GDP and pending home sales. And on Friday, things really heat up with 4 GDP releases. It begins here in Spain. UK GDP first release for Q1. Maybe the momentum will be gone. Finally, we'll feel the Brexit impact. Then we have the US GDP for Q1. Many fear it will be lower than 1%, at least according to the Atlanta Fed, and also GDP in Canada. So quite a strong finish to next week. Right. Any questions? Okay, so let's wrap up the show. This is the Live Market Open wrap-up, April 19th. Big events in markets yesterday. Theresa May announced UK elections, and we had quite a big jump in the pound. Hopes for a softer Brexit. We discussed that in detail. An opportunity to weed out opponents and from within and from without. French elections are closely watched. We previewed that in detail. It's really an open race with 30% undecided and 4 leaders vying for the second round, where only 2 can make it. The dollar attempts a recovery but fails. We're seeing an unwinding of the Trump train. And another stories in the background. We had Georgia special elections, vote of unconfidence for Trump. And well, markets are back after Easter. Important data points to mention that weigh on the US dollar is CPI, inflation is slower, retail sales are not so good, and the hard data wins over the soft data, such as consumer confidence. Early in the week, we had Chinese GDP beating expectations. I think that is positive for the world, but markets are not focused on that at the moment. Let's take a quick look at the major pairs now. At the moment, we're seeing some kind of stabilization, consolidation here after the dollar weakness yesterday in the major pairs. So, well, we're seeing euro dollar actually, complete that dip and rise once again. 107.35, resistance 107.75, support 106.16. Pound dollar getting comfortable in last year's summer range. Above the current levels are 127.90 and 129. Okay, these are the current levels. Further support 127, further resistance 130. Dollar yen, here we are seeing some dollar strength, but well within the recent lower range. Support at 108.10 and 107.50, resistance 110. Dollar CAD, well within the range, 134.17, resistance 134.60, support 133.80. Aussie dollar 75.10, support 74.70, resistance 75.40 and 76.10. Kiwi dollar hugging the 70 level, 69.50 to 70.40 is the current range. Things to watch out for this week. Well, today we have the final Eurozone figures. We have some figures from the United States tomorrow, and Mark Carney will perhaps responding to the stronger pound in a speech tomorrow. And on Friday we have a mix of figures. I would watch out specifically for the UK retail sales and for Neil Kashkari, the dissenter at the Fed, the dovish dissenter, for the next moves this week. Let's just run over our main topics for today. Well, French elections. Highest probability is Le Pen vs Macron, euro positive. Le Pen vs Fillon, a bit euro negative because of less certainty. Le Pen vs Mélenchon, extreme right, extreme left, nightmare scenario. Maybe we'll see, if this happens, maybe we'll see euro dollar under parity. And if Le Pen stays out, low probability, but then we'll have the euro rising. And also run over what we talked about for the UK. The trend is up, but not a one-way street. Look for economic data to cool things down, to provide opportunities for setbacks, for maybe buy opportunities, and hopes for a softer Brexit. What's next in the negotiations that makes a difference? Okay, so that's the wrap up for today. Before we head off, I see a comment here by Montreal 4 superstar pairs. Pound Kiwi will rally 5,000 plus pips. Pound CAD 3,000 plus pips. Pound Aussie and pound yen. And well, the question is, how do you see the likelihood of these four go that far indeed? I don't see those moving that extreme. Well, maybe, well, during a long period of time, but not immediately. That's for sure. I would expect some kind of a correction, maybe with retail sales on Friday before the next move higher. So I think the economic data can cool things down for the pound against all its peers, especially against the yen. I think it's a bit more limited because the yen attracts safe haven flows. Kiwi economy is not doing that bad. Maybe against the Canadian dollar, there's more room, especially if oil prices fall. Yeah, so I would bet for the biggest move actually against the US dollar, but again, certainly not a one-way street and not thousands of pips. Okay. Anyway, that's my opinion. Yeah, so that's it for today. Thank you very much, everybody, for coming. Good luck in whatever you trade today and other days. You can visit Forex Crunch for a full preview of the French elections and for a full description also of levels for pound dollar after the big jump. What you've seen today, you can see a rerun on FX Street, and then video clips will be released separately, first on FX Street and then on Forex Crunch. And don't know when our next live coverage is, but anyway, I'll be here in the morning show next Wednesday, hopefully with a more normal voice. I'll recover from this light cold I have. Anyway, thank you very much, everybody, for coming and for the great questions. And see you next time. Thank you and bye-bye.